Hello and welcome to the look ahead for Wednesday, the 5th of June, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be expecting the Chinese Collecting Services PMI in the European session. We've got PMI figures from the Eurozone as well as PPI inflation data. Over in the US session, we've got Canadian, we've got the Bank of Canada interest rate decision, US ADP payrolls and ISM services PMI, and also the EIA oil inventories. So let's just kick off with the Bank of Canada. Bank of Canada is widely expected to cut interest rates by 25 basis points, taking the interest rate down from 5% to 4.75% after it being at 5% since around July last year. We've seen recent data showing some softening in the Canadian economy. We've also seen that inflation and core inflation, particularly, is below the Bank of Canada's 2% target level. Also, the governor of the Bank of Canada, Tiff Macklem, has recently said that conditions appear to be for lower rates appear to be in place. So, some encouraging signs that we could get a rate cut tomorrow. Here we go, having a look at the chart. We can see that US dollar, Canadian dollar is trading in a falling channel. Now, this is also to do with some weakness that we're seeing in the US dollar recently, after we've had some weakness in the data yesterday and again today as well, with the JOLTS job openings coming in below expectations. But as far as levels to watch on the USD CAD are concerned, on the downside, look out for the weekly low there at 136. We get a break below that. So if we do perhaps have a more hawkish than expected Bank of Canada meeting, and I think there is still potential for them to sound cautious about further rate cuts. So although they are cutting, where they're expected to cut, I think there could be some caution in there about additional cuts. So if we do sort of hear a slightly more hawkish Bank of Canada, then we could be seeing some strengthening in the Canadian dollar. As I said, 136 on the downside, 135.70 is the 200 SMA below that, and then 135.50 is the falling trend line. On the upside, watch out for 137.25. That's the falling trend line resistance ahead of 137.90. Which is the May high. Also, keep in mind that we're getting some pressure on the loonie from oil prices as well, which have fallen for the past 5 straight sessions. So let's just pick up on the oil prices now. Here we go. This is oil. We do have data in from China. It's the services PMI rather than manufacturing, so it doesn't tend to be as influential on oil prices, but still, definitely worth paying attention to. The China data is actually expected to show some stronger growth, which would be an encouraging sign for oil, because quite frankly, oil has fallen very sharply. As I said, it's down at that 4-month low. And this is on a combination of factors. So you've not only got that OPEC meeting, which means that although they're going to continue oil supply cuts into 2025, they've laid the groundwork for phasing out the voluntary oil production cuts of 2.2 million barrels per day as from October. So that means we're going to start to see more supply coming to the market, and it's coming at a time where the demand outlook is starting to look a little bit shaky after we've had that weaker than expected US manufacturing data. We saw that weaker JOLTS opening data today as well. So there are signs and sort of concerns now about the health of the US economy, which is weighing on those oil prices. So as far as levels to watch, as far as oil is concerned, on the downside, watch out for 72.50. That was today's low. It's also the falling trend line support below there. Watch out for 71.60. Ahead of 70, the round number. On the upside, really, there isn't too much in the way of resistance until we get to around $75 per barrel. But as I said, that's looking like quite a bearish chart right now. So as far as other data is concerned, as I said, in the European session, we've got the the PPI inflation, which is expected to show a 0.5% decline for the Eurozone. That's after falling 0.4% the previous month on a monthly basis. Also got the services and the composite PMI data. It is the second reading, so it doesn't tend to be as market moving as the preliminary reading, but the services is expected to show expansion, ongoing expansion. This is the DAX. Now, if we have a look here, the DAX is actually coming under some pressure today of those sort of concerns over growth. And we did see some data out from Germany, unemployment, which actually rose unexpectedly. We saw the jobless number rise by 25,000, up from expectations of just 7,000. So I think that suggests that sort of, the economic recovery in Germany is going to be relatively long process. Now, as far as the DAX is concerned, it's currently testing support at that 13,380 level. That was the weekly low. If we take out that level, then we'll be looking potentially to a fall towards the 18,000 or 17,700, which is the May low. If that support holds, then on the upside, watch out for 18,650. That's the high from March, and above there, the 18,930 all-time high comes back into focus. Now, just finally, we'll finish up with the US data. Looking here at the US dollar, Japanese yen. US data tomorrow, we've got the ISM services PMI, which is expected to rise to 50.5, up from 49.5. And we've also got ADP, sorry, 49.4. We've also got ADP payrolls, which are expected to ease slightly to 178, down from 192. Now, we've had quite a bit of weaker than expected US data, which is really starting to unnerve the market. Concerns over growth have been weighing on sentiment, even though it means that the Federal Reserve could cut interest rates sooner. That doesn't really seem to be offsetting the nerves. We seem to be back at that situation where bad news is bad news. Now, if we just have a look here, this is the US dollar, Japanese yen. We've seen the yen really capitalize on the situation and concerns over the health of the US economy, and obviously the potential of the Fed cutting rates earlier. This US dollar, Japanese yen is testing that 155 level, bearish engulfing candle. So we could see quite a move. If we do see a move below that 155, look out for 153.60, which is that mid-May low, ahead of 152. If we find that 155 holds, then on the upside, be looking at that 158, which remains the line in the sand on the upside. I do hope that you liked what you have seen. If you do, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.